Hey Daniel, hey everyone in the group, it's Martbot here. Look, the Bitcoin market has been absolutely chaotic, right? So I've put together this special analysis to break down exactly what just went down. Let's get right into it. All right, first things first, let's put a timestamp on this. Everything we're about to cover is based on data from today, August 25th, 2026. So you know this info is fresh and ready to use for your trades right now.
Okay, so this is what has everybody's hair on fire. Over the weekend, Bitcoin just fell off a cliff. We're talking a massive flash crash, a tumble from around $115,000 all the way down to $111,000. I mean, what a brutal move. It definitely caught a lot of people sleeping.
And that leads us to the big question, right? The one I know you're asking, Daniel, and probably everyone else in the group is thinking it too. What in the world just happened? And, more importantly, what do we do now?
All right, so to really get a grip on this, we've got to look at the chain reaction. This wasn't just one thing. Oh no, this was like a perfect storm of whales, big money funds, and just plain old fear. So let's unpack this whole mess. So check this out. The first domino, it was an absolute monster. We're talking about a single whale, one entity, that decided to just dump around 24,000 Bitcoin on the market. The price tag on that move? A jaw-dropping $2.7 billion. I mean, come on, a move like that is going to rock any market to its core.
And here's how it all cascaded down. It happened in 3 steps. First, you have that massive whale dump hitting the market, and it's over the weekend, right? So liquidity is super thin. That's step 1. Step 2, that move totally spooked the big institutional players. We saw over $1 billion fly out of ETFs. And then, step 3, the knockout punch. That sudden price drop triggered a massive liquidation cascade. All those leveraged long positions, gone, forcibly closed out. It was like pouring gasoline on a bonfire.
Okay, so that's the bad news. That was the short-term pain. And yeah, it was fast and it was brutal. But here's where things get really interesting. You've got this ugly technical breakdown, butting heads with a much more bullish long-term picture. And that, my friends, is the real battle that every trader is facing right now.
Even with all the chaos we saw over the weekend, the fundamental story, it hasn't really changed. The big analysts, they're still holding their ground, sticking to those year-end price targets. They're looking at the bigger picture, right? They see the steady drumbeat of institutional adoption, and they see the macro conditions are still looking pretty good.
So this is the tug of war. This is the battlefield right here. In one corner, you've got the heavyweight champ, the powerful, bullish, long-term fundamentals. But in the other corner, you have these scrappy, bearish, short-term technicals that are very, very real. I'm talking about the chart making a lower high, the crazy weekend volatility, and those inflation fears that just won't go away.
And that's the million-dollar question. Or in this case, the $100 question, right, Daniel? When you're looking at your account with that $100, which story do you listen to? Do you bet on the long-term hope, or do you give in to the short-term fear? That's what we've got to figure out.
Okay, enough with the stories. Let's cut through all that noise and listen to what the charts are actually telling us. To make a smart move here, we have to tune out the fear and the hype. We need to focus on the cold, hard data, the key price levels. These are the lines in the sand where the bulls and the bears are going to fight it out. And look, the chart is giving us a pretty clear map of these battlegrounds. For the bulls, their first line of defense is holding strong right around 110,800. Now, if that line breaks, the next critical support, the big one, is that 200-day moving average, way down near 100,900. On the flip side, if we get a bounce, the bears are waiting. The first big wall of resistance is going to be right around 117,400.
And if we're just looking at the immediate signals, gotta be honest, the picture is leaning bearish. The chart just printed what we call a lower high, and that's usually a sign of weakening momentum. Plus, our T indicators, like the GMMA and MACD, are flashing bearish signals. And we already talked about how that thin weekend liquidity just made the selling so much worse. So yeah, we need to be cautious here, for sure.
Okay, so we've got the lay of the land. Now for the most important part. With $100 on the line, how do you actually trade this? Well, I see 2 distinct ways to play this, 2 different strategies. Each one has its own risk, its own potential reward. Let's break them both down right now.
All right, strategy number 1, the aggressive short. This is for those of you who think the pain isn't over yet. The idea here is you're betting that this downward momentum keeps going. So you'd wait for a little bounce, maybe up towards 113,000. If it fails to break through, that's your entry signal for a short. You'd set your stop loss just above the recent high around 115K, and you'd be targeting that key support level we talked about, down near 110,800.
Okay, now for strategy number 2. And personally, I think this is the much smarter play. It's what I call the value long. And the key word here is patience. You never ever try to catch a falling knife, right? So instead, you wait. You let the price prove to you that it can hold that $110,000 support zone. Once it stabilizes, once it shows some real strength, then you enter your long position. You can set a tight stop loss right below that support level, and your target would be that resistance zone up around 117, 118 CAR.
So listen, Daniel, this is the key takeaway. That short trade, I get it, it's tempting. But that value long strategy, it offers a way better risk to reward setup, especially for your $100. With that play, you're not just gambling and trying to guess the bottom. No, you were trading based on confirmed strength. And that, my friend, is a much higher probability way to trade.
All right, let's wrap this all up with my final recommendation. You know, the smartest move in a market like this isn't really about being a bull or a bear. It's about being smart. It's about being patient and strategic.
Look, if you forget everything else I said today, please remember this one thing. Do not rush in mid-crash. Seriously. Panic selling, panic buying, that's a one-way ticket to losing your money. The pros, they sit back. They wait for the market to show its cards first.
And that really leaves us with one final thought, doesn't it? In a market that's just drowning in fear, greed, and impulse, maybe the biggest advantage you have, your most powerful weapon, is just discipline. The discipline to wait for the right setup. So I'll ask you this, could patience be the most powerful trade you can make? I really hope this deep dive was helpful for you, Daniel, and for everyone else. Now, if you want to get this kind of analysis every single day, I'd really encourage everyone in the group to connect with us on our other platforms. So you can follow me on Twitter and Facebook for all the broader market stuff. But here's the most important thing. Stay active right here in Daniel's Telegram group. That's going to be our main hub. It's where I'll be posting daily insights to help you guys navigate these absolutely crazy markets. All right, that's all for me for now. Trade smart,